Welcome to the Sunday Signal, where I give you a quick market recap and share the upcoming economic events that matter most. I'm kicking off the first episode of the Sunday Signal with a recap of the first week of fall for markets as the shortened Labor Day weekend signals the end of summer. Here is your weekly recap. The S&P 500 had its first 5-day losing streak since February, down 1.7%. Meanwhile, the Dow Jones Industrial Average and the Russell 2000 both declined more than 2%, while the Nasdaq Composite declined 1.6%. Several U.S. airlines noted a decline in the pace of new reservations and an increase in cancellations, potentially due to fears related to the Delta variant. Based on the JOLTS, job openings, and labor turnover survey data released Wednesday, there was a record 10.93 million job openings waiting to be filled in July, almost 1 million more than consensus estimates. Thursday afternoon, President Joe Biden announced that all large companies of 100-plus employees must require workers to either be vaccinated or submit to weekly testing. Meanwhile, vaccination would be mandatory for federal workers and contractors. On Friday, the Labor Department reported that producer prices rose 0.7% month-to-month in August, a slowdown from July's 1% gain, but slightly above the 0.6% consensus expectations. The year-over-year number was 8.3% higher. However, the elevated producer prices have not yet been fully reflected in consumer prices, which remain subdued. This is a core part of the argument that inflation will be transitory. By consumers rejecting higher prices, producers are left to bear the cost. This reduces their profitability and restricts economic growth. 10-year Treasury yields ended the week slightly higher, although the overall trend in yields has been lower. The biggest news coming out of global markets was the ECB announcement that it had decided to adjust bond purchases under the Pandemic Emergency Purchase Program to a moderately lower pace for the rest of the year. ECB Chairwoman Christine Lagarde assured the market that the European Central Bank was not tapering its stimulus. Quote, "What we have done today is to calibrate the pace of our purchases to deliver on our goal of favorable financing conditions," end quote, suggesting that calibrate is more of a one-time adjustment and not the same as tapering, which implies a more constant pace of stimulus reduction. One last look at the major U.S. indices. The Dow Jones Industrial Average declined 272 points, down 0.8%. to 34,608. The S&P 500 index fell 35 points, down 0.8% to 4,459. And the Nasdaq Composite decreased 133 points, down 0.9% to 15,115. Now, jumping to the world of cryptocurrencies. Over the past week, the crypto market capitalization grew to almost $2.4 trillion before falling below $2 trillion at the end of the week, canceling out the previous 2 weeks of growth. Bitcoin and Ethereum currently hold roughly 42.5% and 19.4% of market share, relatively unchanged from last week. Bitcoin's 30-day volatility jostled in the 3% range, with a peak on Wednesday at 3.7%, the highest since July. According to CoinMarketCap, daily trading volumes grew by 90% to $244.3 billion in a week. Some of the biggest gainers in crypto on the week were Bitcoin Cash, up 3.3% to $678, and Algorand up 10.8% to $1.27. The biggest weekly loser was Uniswap, down 20%, with Decred and Polkadot both down 17% respectively. In terms of other crypto headlines, CEO of Coinbase, Brian Armstrong, took to Twitter to voice disapproval with the lack of clarity from the SEC on what they classify as a security after the SEC threatened to sue Coinbase if it moved forward with a crypto lending platform. In other blockchain news, Cardano finally deployed smart contract functionality on their testnet, but received criticism after multiple bugs casted doubt on the protocol's ability to process a larger number of transactions. Tezos is launching a suite of lending and yield products with the leading DeFi platform Equify. Meanwhile, Dallas Mavericks owner Mark Cuban announced that the NBA franchise will offer cash back rewards on merchandise and ticket payments made with Dogecoin. Speaking of altcoins, according to CoinShares, the altcoin market share hit a record 35% of investment products last week. Almost 40% of the inflows to digital asset investment products were allocated to altcoins. Upon hearing the bullish altcoin news, the collective grumbling from Bitcoin maximalists has been suspected as the cause of a 6.5 magnitude earthquake in British Columbia, Canada. Speaking of the earthquake, Frankie McDonald, a Canadian amateur meteorologist and internet celebrity, received credit for yet again predicting another natural disaster. Way to go, Frankie. The NFT market capitalization exceeded $14.2 billion as the average selling price of CryptoPunk NFTs has reached $400,000. Congrats to the buyers, but mostly congrats to the sellers. Lastly, El Salvador made its first official Bitcoin purchase on September 7th after passing a law last month making the cryptocurrency legal tender in the country. Regardless of your view on crypto, a country purchasing Bitcoin is not something that should be treated lightly, as more countries are likely to follow in their footsteps. Let's now look at the week ahead. Investors will be cautious after a turbulent start to the month. September has a reputation for being the worst month for U.S. stock market returns, although the S&P 500 hasn't seen a 5% daily drawdown in 310 days. Here is your major events calendar for the week of September 13th. It is a quiet day of events on Monday, with the first major data release coming Tuesday with the monthly U.S. Consumer Price Index. Wednesday has the monthly U.S. industrial production figures. Thursday is monthly U.S. retail sales, and Friday rounds out the week with the University of Michigan Consumer Sentiment and Expectations monthly report. Given what credit card companies, airlines, and automakers have shared about reduced consumer spending, the confidence survey will be an important data set for both sides of the inflation debate. Speaking of inflation, joining me now is Harris Kupperman, the man who nicknamed the current regime of central bank monetary experimentation as Project Zimbabwe. Kuppy, thanks for helping me kick off the first episode of the Sunday Signal. Can you share with us what you see as the biggest opportunity right now in markets, or perhaps the most interesting headline that's running across your screen at the moment?
Sure, yeah, and thanks for inviting me. I think there's something interesting going on. I don't think people are paying attention to it. On Friday, Biden, he came out with his vaccine mandate, which is all fine and good, the Constitution be damned. But I think what people are missing here is that vaccines have been around for 6 months now, 9 months almost. Anyone who wanted one got one. There's a lot of people who just don't want it. They refuse, and about a quarter of the population, it seems. And I think when you force companies with more than 100 employees to get rid of a quarter of their employees, it's going to destroy productivity. It's going to lead to an unemployment crisis of epic proportions. I think these people can't just be bullied into getting the vax. They've done their research. They don't want the thing. And I think it's going to be highly inflationary because when you reduce productivity and you just keep pressing the stimulus button, eventually, it's supply demand. The demand side is going to accelerate. The supply side is going to slow. In particular, I'm looking at the resource sector because extractive industries, I think they tend to lean, a bit to the right. They tend to be more anti-vax. I've been polling some of my friends in the energy sector. The office staff is maybe half vaxxed, but the field hands out, running the rigs and doing the maintenance, less, maybe a quarter vaxxed. I mean, what happens if 75% of the staff have to be let go? I mean, you might not have enough people for basic maintenance of pipelines. This could be bad. This could be, epically bad on the supply side. I'm still formulating this all through, but yesterday, the market opened up green because it always opens up green. And they just kept selling off all day. And all day long, my phone was ringing with friends of mine who were saying, I think I'm going to get fired. I'm not taking that vax. And then I had companies calling me and they're saying, I don't know how to run my business. We have no employees here soon. And I don't know how it's going to play out. Of course, I think they'll end up walking this back, but it's going to create disruption and chaos. And that usually leads to increases in commodity prices. And I think the trade remains get long commodities. I mean, the whole periodic table is probably going to go mental. That's been my saying all year, and it's been the winning trade. And whether it's energy or uranium or nat gas or coal or copper, I can just keep going. It's all going up. And I think this is just going to add more fuel to the fire, and that's what I'd be paying attention to.
Awesome, Kuppy. You're always one of the first people to pick up on some of these event-driven opportunities. And speaking of, I believe you just released this week's version of KTM, the Kuppy's event-driven monitor. Do you want to share a little bit of information on that?
Sure. We have a weekly monitor that comes out. It tracks about 24 event-driven strategies. What we've learned in the markets over the last decade is that there's a lot of quantum computers out there that are really good at looking at things in linear format. They're really good at taking everything in the Bloomberg and digesting it and finding the right price for assets. Opportunity exists at inflection where the computers can't model it. Spin-offs, privatizations, mutualizations, cap structure change, CEO change. All these things set a company in a different direction. And they tend to be very dynamic. And if you're paying attention to them, you're going to make some money. And so we have this service. You can sign up for a 4-week free trial. I recommend everyone signs up. KEDM.com. And we give a little market commentary. We've been very early on a lot of trades. And then we give the data out with us flagging the most interesting stuff. And I can't imagine investing without it these days.
Fantastic. Tons of value there. I appreciate you, Kuppy. How can people contact you to learn more about your investment strategies, your services, even outside of what you're doing with KTM, but also as a manager?
So I have a blog, adventuresinCapitalism.com. We usually publish about once a week. It's free, so you get what you pay for, but we've been nailing these trends for a decade now. And if you want to learn more about my fund, go to pracap.com, PRACAP.com, but you better be accredited.
Gotcha. Kuppy, thanks for coming on, man. I appreciate the info, and I look forward to having you back soon.
Hey, thanks for inviting me.
Well, that does it for the first ever Sunday Signal. I hope you found it informative and helpful, and I hope you'll come back and join me next week for another episode of the Sunday Signal. Until then, have a great week and good luck out there.